What is going on, everybody? Welcome back to Trading Learning 101. This is going to be part 2 of our Candlestick Ultimate Charting Guide. Candlestick Patterns, Star Position. A candlestick that gaps away from the previous candlestick is said to be in star position. The first candlestick usually has a large real body, but not always. And the second candlestick in star position has a small real body. Depending on the previous candlestick, the star position candlestick gaps up or down and appears isolated from the previous price action. The two candlesticks can be any combination of white and black. Doji, hammers, shooting stars, and spinning tops have small real bodies and can form in the star position. There are always several 2 and 3 candlestick patterns that utilize the star position. The harami, a candlestick that forms within the real body of the previous candlestick, is the harami position. Harami means pregnant in Japanese. Apparently, the second candlestick is nestled inside the first. The first candlestick usually has a large real body and the second a smaller real body than the first. The shadows, high and low, of the second candlestick do not have to be contained within the first, though it is preferable if they are. Doji and spinning tops have small real bodies, meaning they can form in the harami position as well. There are also several 2 and 3 candlestick patterns that utilize the harami position. Hammer and hanging man. The hammer and hanging man look exactly alike, but have different implications based on the preceding price action. Both have small real bodies, black or white, long lower shadows, and short or non-existent upper shadows. As with most single and double candlestick formations, the hammer and hanging man require confirmation before action. The hammer is a bullish reversal pattern that forms after a decline, in addition to a potential trend reversal. Hammers can mark bottoms or support levels after a decline. Hammers signal a bullish revival. The low of the long lower shadow implies that sellers drove prices lower during the session. However, the strong finish indicates that buyers regained their footing to end the session on a strong note. While this may seem like enough to act on, hammers require further bullish confirmation. The low of the hammer shows that plenty of sellers remain. Further buying pressure, and preferably on expanding volume, is needed before acting. Such confirmation could come from a gap up or long white candlestick. Hammers are similar to selling climaxes, and heavy volume can serve to reinforce the volatility of the reversal. The hanging man is a bearish reversal pattern that can also mark a top or resistance level. Forming after an advance, a hanging man signals that selling pressure is starting to increase. The low of the long lower shadow confirms that sellers pushed prices lower during the session, even though the bulls regained their footing and drove prices higher by the finish. The appearance of the selling pressure raises the yellow flag. As with the hammer, a hanging man requires bearish confirmation before action. Such confirmation can come as a gap down or long black candlestick on heavy volume. Inverted hammer and shooting star. The inverted hammer and shooting star look exactly alike, but have different implications based on previous price action. Both candlesticks have small real bodies, black or white, long upper shadows, and a small or non-existent lower shadows. These candlesticks mark potential trend reversals, but require confirmation before action. The shooting star is a bearish reversal pattern that forms after an advance in the star position, hence its name. A shooting star can mark a potential trend reversal or resistance level. The candlestick forms when prices gap higher on the open, advance during the session, and close well off their highs. The resulting candlestick has a long upper shadow and a small black or white body after a large advance. The upper shadow, the ability of the bears to force prices down raises the yellow flag to indicate a substantial reversal. The upper shadow should be relatively long and at least 2 times the length of the body. Bearish confirmation is required after the shooting star and could take the form of a gap down or long black candlestick on heavy volume. The inverted hammer looks exactly like a shooting star, but forms after a decline or downtrend. Inverted hammers represent a potential trend reversal or support levels. After a decline, the long upper shadow indicates buying pressure during the session. However, the bulls were not able to sustain this buying pressure and prices closed well off of their highs to create the long upper shadow. Because this failure, bullish confirmation is required before action. An inverted hammer followed by a gap up or long white candlestick with heavy volume could act as bullish confirmation. Engulfing pattern. Bullish engulfing pattern. A 2-candle pattern appears at the end of a downtrend. The first candlestick is bearish. The second candle should open below the low of the first candlestick low and close above its highs. Bearish engulfing pattern. A 2-candle pattern. The first candlestick is bullish. The second candlestick is bearish and should open above the first candlestick's high and close below its low. The dark cloud cover. A bearish reversal pattern that continues the uptrend with a long white body. The next day opens at a new high, then closes below the midpoint of the body of the first day. Bullish piercing pattern. A piercing pattern is a 2-day candlestick pattern that marks a potential short-term reversal from a downward trend to an upward trend. The pattern includes a gap down after the first day where the second day begins trading, opening near the low and closing near the high. The close should also be a candlestick that covers at least half of the upward length of the previous day's red candlestick body. The morning star is a sign of hope and new beginning in a gloomy downtrend. The pattern consists of 3 candles, one short-bodied candle called a doji or a spinning top between a preceding long black candle and a succeeding long white one. The color of the real body of the short candle can be either white or black, and there is no overlap between its body and that of the black candle before. It shows that the selling pressure that was there the day before subsiding. The third white candle overlaps with the body of the black candle and shows a renewed buyer pressure and a start of a bullish reversal, especially if confirmed by the higher volume. Evening star. A 3-candle pattern. After a long bullish candlestick, there's a bullish gap up. The bulls are in control, but they don't achieve much. The second candlestick is quite small and its color is not important. The third bearish candle opens with a gap down and fills the previous bullish gap. This candle is often longer than the first one. 3 white soldiers. A 3-candle pattern. A series of 3 bullish candles with long bodies. Each candle should open within the previous body, better above its middle. Each candle closes at a new high. The 3 black crow pattern consists of 3 consecutive long-bodied candlesticks that have opened within the real body of the previous candle and closed lower than the previous candle. Blending candlesticks. Candlestick math. Candlestick patterns are made up of 1 or more candlesticks and can be blended together to form one candlestick. This blended candlestick captures the essence of the pattern and can be formed using the following: the open of the first candlestick, the close of the last candlestick, the high and low of the pattern. By using the open of the first candlestick, close of the second candlestick, and the high-low of the pattern, a bullish engulfing pattern or piercing pattern blends into a hammer. The long lower shadow of the hammer signals a potential bullish reversal. As with the hammer, both the bullish engulfing pattern and the piercing pattern require bullish confirmation. Blending the candlesticks of a bearish engulfing pattern or a dark cloud cover pattern creates a shooting star. The long upper shadow of the shooting star indicates a potential bearish reversal. As with the shooting star, bearish engulfing and dark cloud cover patterns require bearish confirmation. More than 2 candlesticks can be blended using the same guideline. Open from the first, close from the last, and the high-low of the pattern. Blending 3 white soldiers creates a long white candlestick, and blending 3 black crows creates a long black candlestick. Chart examples. We can see price fell from a mental $21 with a big red selling candle. Then selling starts to slow down at a big mental $20 psychological number. We formed a dragonfly doji also. The long bottom wick tells us a buyer is present. Prices reverse and we get 2 big green candles back up to $21. With this example, I want to point out this stock is in a clear downtrend, lower highs and lower lows. The stock hovers right below the VWAP, volume weighted average price, which is the orange line. We get a doji and prices continue to fall lower. When spotting a candlestick pattern like a doji at the end of a trend, you always want to try and wait for confirmation. And this is the doji I'm talking about right here. At the top of this orange line, we see that this is in a clear downtrend. It gets a quick consolidation going sideways for a moment. It looks like it wants to try to reverse, but it doesn't. And the trend continues lower. Notice all the upper and lower wicks I have circled. With candlesticks, you can see multiple times with multiple candles in a specific area, large buyers and sellers. With this example, I want to point out the importance of noticing the long wicks, both at resistance and at support. I've tried to circle all of the important ones. For an example, up all right here, all these long wicks at a resistance level. That's telling us there's an iceberg there and a big seller. With all of these long wicks that I've circled here at support, that's telling us that there's a buyer there. And then these 2 circles and all of these wicks at resistance, again, there's an iceberg up there and buyers cannot push prices higher. There is a seller absorbing all of the buyers. With candlestick charts, traders are always on the lookout for patterns, wedges, triangles, U-shapes, all kinds of patterns. And here's a couple more examples of some charts that I've drawn up. We have a downtrend here with a wedge and it continues lower. We have multiple wedges and consolidation on this bottom white chart. We have a bunch of rounding tops. We have a head and shoulder pattern. We have a double bottom, some wedges right here, a downtrend, an uptrend. Don't be afraid to mark up your charts, draw trend lines, or trace patterns that you've noticed. That's what technical analysis is all about. Practicing and studying. If you want to be a trader in the stock market, it is very competitive. If you want to get better and good at reading charts, you must study and practice breaking down charts every day. What is the story? Every stock chart has a story. It's up to you to put the pieces together to tell that story. Candlesticks and gaps. Windows, as they are called in Japanese candlestick charting, or gaps, as they are called in the West, are an important concept in technical analysis. Whenever there is a gap, current open is not the same as prior closing price. That means that no price and no volume transacted hands between the gap. Often after a gap, prices will do what is referred to as fill the gap. This occurs quite often. Think of a gap as a hole in the price chart that needs to be filled back in. Another occurrences with gaps is that once gaps are filled, the gap tends to reverse direction and continue its way in the direction of the gap. This is a great trading strategy traders like to look for. Common questions. A popular question I get all the time is, do you use the wick or the candle body as support or resistance when drawing lines? I use the wick. I also take into consideration and look at where price is at also. I like to try and stick with psychological numbers. $1, every 75 cents, every 50 cents, every 25 cents. I also look at support and resistance levels as trampolines, not as a solid wall. When prices hit a level of support or resistance, you will notice prices push through and snap back up, or they may fall through and fall hard. Book recommendations. Here are some books I would highly recommend if you want to expand your knowledge on Japanese candlesticks. My #1 favorite candlestick book is by Steve Nissen, Japanese Charting Techniques, which is this gold book here on the left, followed by Steve Nissen's second book, Beyond Candlesticks. Stephen Bigelow, Candlestick Profits. Stephen Bigelow is another big name when it comes to candlestick knowledge and education. And the fourth book is Candlestick Charting Explained. What is volume? Volume represents all the recorded trades for a security during a specified period. This specified period can range from daily charts to 1-minute charts. Most trading platforms print each volume bar as either green or red. Green bars are printed if the stock closes up for a period, and red bars indicate a stock closed lower for a given period. Volume analysis is the technique of assessing the health of a trend based on volume activity. Volume is one of the oldest day trading indicators in the market. Volume is one of the most popular indicators used by investors. In addition to technicians, fundamental investors also take notice of the number of shares traded for a given security. Volume is one of the simplest methods for observing buying and selling activity of a stock at key levels. The tricky part is volume can provide conflicting messages for the same setup. Your ability to assess what volume is telling you in conjunction with price action can be a key factor in your ability to turn a profit in the market. Volume example up. When a stock is moving higher in a stair-step approach, you want to see volume increase on each successive high and decrease on each pullback. The underlying message is there is more positive volume as the stock is moving higher, thus confirming the health of the trend. The volume increase in the direction of the primary trend is something you will generally see as stocks progress throughout the day. You will see the strong move into the 10 a.m. time frame, a consolidation period, and then acceleration from noon until the close. Volume example down. This is a 5-minute chart. Notice the selling volume, red bars, are increasing as the stock moves lower and lower. Volume price analysis. After learning about candlesticks, the next area I would learn about is volume. Volume is so important in the stock market as a trader. The best book I have come across is Volume Price Analysis by Anna Culling. This is a must read and own. Shares outstanding versus float. Now that we've learned about volume, we need to know what a stock's shares outstanding and float are. Shares outstanding refer to a company's stock currently held by all the shareholders, including share blocks held by institutional investors, and restricted shares owned by the company's officers and insiders. Outstanding shares are shown on a company's balance sheet under the heading Capital Stock. The number of outstanding shares is used in calculating key metrics such as a company's market capitalization, as well as its earnings per share, EPS, and cash flow per share, CFPS. A company's number of outstanding shares is not static and may fluctuate widely over time. Shares outstanding represent the amount of stock on the open market, including shares held by institutional investors and restricted shares held by insiders and company officers. A company's outstanding shares can fluctuate for a number of reasons. The number will increase if the company issues additional shares. Companies typically issue shares when they raise capital through an equity financing or upon exercising employee stock options, ESO, or other financial instruments. Outstanding shares will decrease if the company buys back its shares under a share repurchase program. Stock float. The term float refers to the regular shares a company has issued to the public that are available for investors to trade. This figure is derived by taking a company's outstanding shares and subtracting any restricted stock, which is stock that is under some sort of sales restriction. Restricted stock can include stocks held by insiders but cannot be traded because they are in lockup period following an initial public offering, IPO. A company's float is an important number for investors because it indicates how many shares are actually available to be bought and sold by the general investing public. The company is not responsible for how shares within the float are traded by the public. This is a function of the secondary market. Only changes that affect the number of shares available for trade change the float, not secondary market transactions, nor the creation or trading of stock options. When I look up a stock's shares outstanding float, I like to use finviz.com or Yahoo Finance. The more places you check, the better, as every website may have different updated numbers, and we do not know how often they update this data. Investopedia. What I covered in this guide is just a scratch of what you need to know. You have so much to learn as a new investor and trader. Investopedia is like the dictionary for the stock market. I highly recommend using this website as much as you can to learn new lingo, terms, or any question you may have about the stock market. They have a built-in search bar you can easily use. Type in your question and it will pull up blog posts from other people who have researched and posted on this topic you are searching. In the stock market, you are going to make a lot of mistakes, as we all do in everyday life. A successful trader accepts when they are wrong and learning from mistakes. Have that patience, discipline, and study. Life itself is your teacher, and you are in the state of constant learning. I want to thank you all for tuning in and watching this complete candlestick charting guide. I really hope you all liked it and was able to take away some knowledge through this course. If you're new to the channel, please hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors. Hit the like button on this video. Help me out in the YouTube algorithm. If you have any questions about candlesticks or any questions about a specific topic I went over in this guide, please feel free to leave a comment down below. My name is David. I am the head trader at Trading Learning 101. And again, I hope you all found great value in this guide. And don't be shy, head on over to the Trading Learning 101 YouTube homepage and go through all of the playlists that I have created. Learn and grow that knowledge as a trader and investor. The more you know, the better. And if you're interested in joining the Trading Learning 101 Discord group, I will leave a link to join the chat room in the video description. Please feel free to join if you're interested. Until next time, everybody, have that patience, have that discipline, and study, study, study. Later.
The most valuable commodity I know is information. Wouldn't you agree?